interesting people. Looking forward to hear you. The ground is yours.
Thank you very much. Yeah, I think we've got a tall order here. I think most of the panels have talked about the future and their predictions for either this year or next year to some degree, but it's our role to have our entire session focused on pretending that we all have crystal balls or actual oracles. But bear with us as we try to dig deep inside to see the future. It's obviously very difficult to do in the crypto space. I guess we should introduce ourselves. I'm James Ryan. I'm currently the head of marketing at a soon-to-launch decentralized exchange called GammaX. And I've been in the crypto space for, I guess, about 5 years, starting with being the head of marketing at the Brave browser and their token project, and a few exchanges in between. Before that, I was a journalist. So why don't we go ahead?
Hi, I'm Sarah. Well, I was working for BMW for several years, and I decided to leave like the world, the corporate world, like only 1 year ago. I started working for a VC based in Munich, and we made only Web3 investments. This is how I professionally got into the blockchain space. And since January, so pretty new, I got the managing director of Blockchain Founders Group, and we are basically helping startups in the Web3 space to grow. So we are an accelerator / incubator, and yeah, trying to find and build great startups.
Hi, my name is Chia. Great to be here. I invested at Pantera Capital. We manage about $5 billion, investing globally, seed to Series B. I help to focus on a lot of the DeFi, infra, Web 2.5 side of things. Used to be a fintech, TradFi fintech VC, ex-Rocket Internet before that, and have a legal background before that.
Hey, my name is Pierre. I work as an investor at Lattice, which is like an early stage crypto VC fund. We're like focused on first money in, pre-seed seed. Vertical agnostic, we have $65 million under management. And I also built Metrics, which was like a Web3 fundraising data set that got acquired by Masari last summer. And yeah, that's it.
Hi everyone, so very happy to be here. Alexis, Kricorian, I'm the founding partner of NodeGate. Briefly on me, I used to be, before joining the marvelous world of blockchain technology, an investment banker for close to a decade, mostly advising on merger and acquisitions, but also capital raising for some of the world leading investment banks. And then a couple of years ago, got the crypto bug, very excited about discovering this new technology. What I love in it really is the technology and all the applications. Innovation is really my credo. And NodeGate, what we do, it's a new venture that I'm building together with a business partner. It's really about being the partner for entrepreneurs and also investors in Web3 who are looking to raise capital and the others who seek to invest into it. There's a lot of uncertainty as to where the world is going to go. So crystal ball, I agree. But I'd love to share some of the things I've seen already.
All right, great. Well, we'll start with the first, since we have a lot of investors, or I guess all investors on the panel will have some of our questions, I think, really focused at that community. So starting off with you, Alexis, will investor sentiment improve or deteriorate in 2023? And two-part question, what will be the biggest factors influencing which direction it's headed?
Yeah, thanks for the question. So in terms of investor sentiment, it's fair to say the year has started from a difficult footing. Certainly, outside macroeconomic factors are not helping. The industry itself is facing a crisis, let's face it, since last year's events. Investors are very careful. All the investors I spoke to tell me they are having a lot of capital to deploy, a lot of dry powder, but they really don't want to invest in the wrong place. And I think some of the world leading venture capital funds got their fingers very burnt last year, so they'll be disciplined. However, sentiment will definitely improve. It will particularly improve as you start to see some of the builders who are building use cases, real world assets, as some people like to call it, I think, real asset-based blockchain technology applications. And here I'm talking about physical assets as well as intangible assets. And you will also see the cryptocurrency markets. It's interesting if you look at the factors you mentioned, right? If you do a correlation between Bitcoin price and amount of VC funding over the last couple of years, you have almost a perfect curve, right? VCs have, to a very large extent, invested together with prices of underlying cryptocurrencies, and they continue to have this high correlation. However, this switch from a speculative mindset, the hedge fund, short-term liquidity opportunities, and tokenomics analysis investments, this is slowly shifting towards more long-term investment opportunities. So it will improve, and this is also a matter of where the industry is going.
Yeah, you want to go ahead and chime in?
Yeah, maybe to add a few things. I personally think that like 2023 is going to be like a bloodbath for the startups ecosystem, like broadly speaking, and obviously crypto will follow. Like many startups raised like pretty big funding rounds in 2021 on like insane terms, and I mean, if they have like 2 years on the running race, pretty easy to do the math. They will have to raise again this year, but they will struggle. So like good startups will do like flat or down rounds. Okay, startups will die, and like very good startups will probably raise like full-on funding rounds, but that's going to be tricky. I also think, as you said, that of course, like VC funds have dry powder to deploy, but they will wait. They will deploy over the next like 3 to 4 years instead of maybe 1 year. So you basically divide this like dry powder by like 3 or 4. And like many funds are also like struggling to raise like follow-on funds because LPs are more careful, and funds will be less big than what they used to be. So yeah, that's gonna be a tough year. I think we have to keep that in mind, and I also think that founders will cut burn as much as they can to face it.
So do people agree that that's we're either faced with some sort of bloodbath, or I think mass extinction was another term that's being thrown out, or is it maybe going to be more of a consolidation and some of these companies may be absorbed from others, or in general, does anybody want to comment on sort of the general environment, what's going to happen with some of these smaller and mid-sized companies?
Yeah, well, I mean, some thoughts that just came to my mind, especially on following up what Pierre, sorry, just said, was that for a startup, it's not enough to convince 1 or 2 VCs or angels. You always have to have several. And if like the VCs are like waiting for like maybe a more stable environment, it's super hard for the startups to really do the fundraising, because like they really have to convince several VCs. And if one is hesitating, maybe the other is as well. So it's always the same. I mean, like in 1 or 2 years ago, it was exactly the other way around. So the first VC started to invest, and the other VCs followed super fast sometimes, and sometimes even too fast, because we all know some of them didn't do the due diligence the proper way. So, and now it's the other way around. So maybe you are talking to several VCs and they are kind of, okay, maybe we invest, but then there's 1 or 2 hesitating, and then the others don't invest as well. So this is something just came to my mind, and this makes things even more difficult. But like the others already said, there is, from my point of view, there's still a lot of money in the market. And at a certain point, the money has to go somewhere. And I was just thinking about, if people start investing again, because at the moment we have in the housing market, in the shares, everywhere we have like everything just crashed down, and now we have like everything is going sideways. But at a certain point of time, I guess if macro environment gets more stable, etc., there will be a certain point where we start investing again. And then people might think about what has the highest upside potential. And if you then think about this, so crypto, blockchain, everything around Web3 space has the highest potential. I mean, of course, there are a lot of risks involved as well. But nevertheless, I think the potential is way higher than, for example, in the housing market. And this is why I think as long as startups can survive the next months, and we all don't know how long the next months will be, but if they are able to survive some more months, there might be great chances to get funding afterwards.
So assuming that most of us agree that there is money available that would be heading into the crypto or blockchain space, Web3, like what are some of the specific areas that even in sort of maybe a little bit nervous market still are going to make sense, kind of growth areas or areas that are on the horizon for this next year? Jeng, do you have any thoughts on that, or do you have any thoughts on that? Yeah.
Yeah, I think one thesis that we've followed, I think, pretty strongly is that there's a huge opportunity set to be made right now. A lot of the incumbent players that have existed and dominated the space over the past 2-3 years have, to a large extent, a lot of them have blown up or suffered a lot of losses. And so a lot of the incumbent players that we see, are not necessarily in the best position to continue being a market leader. And we've seen that across quite a lot of sectors. And so while 2-3 years ago, or maybe a year and a half ago, I might say, hey, this sector is extremely hot, extremely difficult, plenty of well-capitalized players in the space. I think the opportunity set emerges to kind of take them down, especially with all the kind of events that have happened over the past year. And so, we really look across the entire spectrum, from basic things like custody, from basic things like some of the institutional enterprise players out there. I think there's a lot kind of that has existed that remains kind of new open spaces. In terms of kind of emerging spaces, I think fairly standard narratives that you see out there that do make sense. We've been spending a lot of time kind of again around real world asset yields, a lot of time around kind of what some of the new emerging consumer trends could look like in the depth of this market. And so pretty excited about some of those infrastructure players that are being built that we funded over the past few months.
So what about, I know one area of interest that I think you had was in the environmental arena, and there's obviously a lot of capital going in the traditional space, from alternative energy sources to electric cars, and I know carbon capture is potentially one area where the blockchain can have some impact. Do we feel that that's something that's going to maybe emerge or grow this year?
So, well, what I think that might be important for the next year, or I can see many startups starting to build in that area, is the refi space. You just mentioned the environmental aspect. And what I personally like a lot about the refi space is, like, you have people from the financial markets, but you have also a lot of people coming that really want to build something in the way that saves our planet. I mean, so. And I really like, so Charles Hoskinson, the founder of Cardano, he once said, and I kind of have to rephrase it, but he says, like, the goal is to put the greed of people together with some positive outcomes. And I think this is something really amazing, and I think this really works in the refi space, because people want to earn money, but people want to build something that helps the environment and the planet to be safe and to survive. And this is what I see, and I think it's going to be super important. At the moment, many things focus on the carbon space, so CO2 topics. So this is, for me, what I see at the moment, the biggest space in the refi space. But I think there will be many more use cases coming within 2023. And yeah, maybe one fact, like the carbon market will be around 50 billion by 2030, because over 2,000 companies made like a net zero pledge. And if they really stick to that pledge, it's the voluntary carbon market, by the way. And so if they really stick to that pledge, there will be a lot of involvement in that space. And I think this is one of the things I see for the next years. And I think not only for 2023, but maybe a little on the long run.
Pierre, did you?
Yeah, on the refi side, I think the definition of the refi space has been like too narrow lately, but I think this is because we lack the needed infrastructure. So far, as you said, it has mostly been like putting basically carbon credits on chain, which makes sense, but I don't think that's the only way to solve the climate change. And I think that there are like many challenges in terms of like credits verification, standardization, that's why most of the companies in the space so far have not been like very successful. Let's be honest, because we lack the underlying layer. Yeah, it's something which used to be like very hot, maybe like a year ago. It's definitely something we should like all keep an eye on.
And then flipping this around from the startup perspective, and I'm sure there's plenty of people in the audience that are here looking for investors or VCs to meet with. From a startup perspective, I mean, what do young companies have to do differently in the current environment to attract your attention or to earn the investment interest? Yeah, go ahead.
I update that one. Yeah, I do speak with these startups almost every day. So I would first of all accept the fact that the environment is difficult and that it is not going to be an easy journey to raise capital. It's never easy, but right now people have to accept it takes longer, and you need to have more due diligence made into your company. So first have these expectations to start with. That's an important thing I remind people. The second is really around the use case. Whereas people before, in the bull run period, were investing into tokenomics mostly, when there was a native token project, or in quick return opportunities. You now have to identify what is the market that you're going to penetrate and how will you execute on a plan that will generate the user adoption and then the revenues and the returns the investors are expecting to have. So first think about how much money am I going to make rather than which type of instrument I could use to raise capital. The last thing I would say is there are many different types of investors. Like, of course, I'm very lucky to be next to a very prominent, venture capital funds, and don't only think about venture capital. There's different kinds of ways companies outside the world of Web3 get cash. I'm not going to expand into that, but think about the various options that you have to run through. To the earlier point on, are you going to make it until the market gets better? People have to start getting creative. You will probably not make it if you just bump your head at the closed door of a VC fund. And therefore it is, keep it a bit tighter. Probably the cash burn has to be reduced dramatically. That's another point, sorry, I'm a bit long. Many teams have expanded rapidly to develop a great product that doesn't yet have the traction it needs, but you're not gonna get the capital today. So in one way or another, you have to limit and extend the runway and limit the cash burn. I would say these are some of the things at least I discuss with entrepreneurs I speak to almost every week. That matter.
Maybe I can add just one little point. So you have to adapt and pivot as startup quite often, and you have to be really flexible, I guess. If you now realize that there is no like 100% market fit, but people are like, they are not really into your product, then you have to change and pivot even a lot faster, I guess. So this is something I think is super important as well to survive that phase and to really listen to what the advisors or maybe the VCs tell you to change, to adapt.
Any other advice for young startups?
Yeah, maybe like very simply, I just think that founders should build things that actually matter and that people want to use, because when you look at, let's be honest, when you look at the Dune Analytics dashboards for even like top protocols, like the traction is always very tiny. So obviously we're still early, but I think we have to be like very pragmatic and just identify what we need in the space to make it like moving forward. That's very simple, but I think that many founders tend to forget that.
So I think it's natural at a conference occurring right now that there's been talk on almost any session about sort of a post FTX environment, and it's a lot of it's been about the added regulation that's coming in, or people are looking for that to happen. So I guess my question would be, how will regulation affect the environment, but also maybe talk about maybe some opportunities that this new kind of post-FTX environment would offer for entrepreneurs?
I'm happy to take, I won't be too long, but certainly if you follow the news, you hear a lot about what's going with the SEC, the United States. It's just one case, right? And there are other geographies around the planet that are also looking at regulating the space. There are other cases than that one. Regulation will come. This is not a battle that will be won in kind of way of the good versus the evil. Regulation is coming. Why? Because they are the policemen of financial markets. They have a role. They are paid literally to protect consumers. So they will try always to find ways of protecting them. Where there's a real window of opportunity here is for every business that is safely in their business model and the way it's been built in an area that doesn't enter a potential kind of shady area or unregulated part of the world of finance. All the players which are going to be regulated are going to suffer in the short term, and they're going to have to adapt their business models. To your point on pivoting, they will have to adapt. Those which are not yet there and built a purely in the future regulated space will struggle even more. But there's lots of things that won't be regulated. So you don't necessarily have to build a business that will be a security, necessarily. And that goes back to the earlier point. So build a business that has a use case that is really useful, and then think about the instruments that are attached to it to grow it.
And maybe to add another thought, so crypto and blockchain is like normally in many markets, the retail investors are second. So they follow what the institutionals and what the banks and the huge markets are doing, and the retail investors are following later. And for crypto, it's the other way around. So the retail investors have been first in, have been working in that space and investing and doing everything around, in the market basically. And so now the institutionals need to follow. And I think regulation is the only option that the institutionals will be able to follow. So I don't want to say whether it's good or bad or whatever. So but I think it's necessary to open up the market for them.
Yeah, I also think that the FTX collapse is actually a good thing for DeFi, because as we also like DeFi lending solutions, decentralized exchanges just like kept working as expected, and that's pretty powerful. So I think that more and more companies will actually put as many things as they can like on chain and just like build real transparent businesses.
It's interesting, I was on a panel earlier where the sentiment was overwhelmingly against government regulation and a sense that the industry can and should self-police. I personally think there should be partnership, and that's what we need. But in general, does the investor community welcome more regulation or fear it as many entrepreneurs do? Or are you neutral on it?
I think regulation's a tool. I don't know if anyone here in the room will comfortably say that crypto as an industry has not harmed consumers or any consumer. And I think that if you can't say that with confidence, then we need to be thinking more carefully about market structures to protect consumers from harm. And if we can't do that, then we will have regulations imposed upon us, again, for the good of the market. And so while I do think we need to accelerate a lot of kind of market structures that protect consumers, we haven't really done a good job, as evidenced by everything that's happened. And I don't even need to point to specific things. So I think it's pretty self-evident there. And so I think, if we take one huge step back, fundamentally, and slightly biased because I spent many years investing in traditional fintech, but fintech is crypto is, for me, a subset, a very different world, but still fundamentally a subset of fintech. And fintech is incredibly complicated. And so to your earlier question about how do we think about regulations in the space, I think that the bar, not just on product market fit to successfully build a venture-backed company, has increased because of constraints of capital. The bar for your knowledge of regulatory issues has also increased. unfortunately imposed by the market. So I think it's not just a measure of, oh, you know, I can hustle really, really hard and do this, but unfortunately, the minimum standard of regulatory awareness and how to navigate these situations has just fundamentally increased to at a point which is, you know, not something I think most people can wing it. And so I think that level of awareness that, hey, the bar actually is now, you know, I won't say high, but like much higher than before, I think that's something that founders need to be aware of. And that's something you need to plan for, right? Unfortunately, lawyers cost a lot of money. And unfortunately, a lot of what's been going on, I wouldn't say there's a terrible level of opaqueness. I think there's actually quite a fair amount of certainty in terms of things that you cannot do. And I think that those are some of the things that if you're an early stage founder, you need to work around.
So before we open up, I think we have a couple minutes before we open up to questions, but I wanted to do some kind of change it up and do just a quick read on a few things. For example, if I asked, do you think that the FTC's enforcement unit budget is going to go up or down this year? I think we'd all say up. So just with a quick thumbs up, thumbs neutral, thumbs down on some things in the blockchain space. So NFTs for 2023, are we going to see upswing, downswing, neutral? Quick. Okay, so we got 2 neutrals and 3 thumbs up. And why is it a thumbs up for you?
I think the space will hopefully get out of being only compared with some pictures, because there's so much more behind the technology, and I think we in 2023 we will be able to evolve in that space, that it's more than only pictures.
DeFi lending and borrowing platforms. So someone who has a thumbs up, where do you think the big opportunity there is?
I mean, we already can see it, frankly. It's no kind of forecast, frankly. Centralized finance is suffering. It's moving away to decentralized finance. Decentralization is the underlying use case of Bitcoin to start with. There is a trend towards it, and I think the protocols also are attracting lots of talent and money. Naturally, it's a virtuous circle in the end. So I'm up for that.
All right. So in terms of, let's see how optimistic we are, and since it's so critical to the investment culture, Bitcoin at 30K. We got two abstains and 2 ups.
Yeah, nobody knows.
Ethereum at 2K.
I'm not legally allowed to get the price of price.
All right. All right, we've got a few minutes left for questions. Yeah. Yeah. Come on, it's your chance here. Some important people up here on stage. Yeah.
Hello, I would like to ask, what is the secret sauce, what will attract you on a startup the most? Like what should have a founder, or what kind of project are you willing to invest?
I mean, at what stage? Like early stage? Yeah, I mean, I think it's like pretty straightforward. I think at the earliest stage is basically like a bet on the team, the idea, the market. Yeah, I think that's just like as simple as that in the crypto space. Because of composability, it's pretty easy to build like a startup, because you can like fork code, but you have to build something really innovative that can build like real moats against like potential competitors. But I think like, I mean, we at Lattice, we mostly do like pre-seed funding rounds, and it's always about the team primarily.
Yeah, maybe to add one thought, it's the team. And the second thing is, of course, the product. And especially sometimes in the crypto space, you have to take care that you're not too early. Even that can happen. And sometimes it's like, if the product is just too early and the market is not that far, it might be a problem as well. But team is always first, especially in the pre-seed, super early stage.
Hi. How do you value the difference between digital platforms that can bring massive Web3 onboarding, but let's say low tech versus deep tech companies, like you as a balance for investment?
I focus a lot on infra, which I'll classify as deep tech here for the purposes of this conversation. Again, I think it boils down to PMF, right? PMF is just easier to measure for consumer plays because you can point to user adoption, et cetera, et cetera. PMF for infrastructure plays, again, it's just talking to developers, having a good understanding of the historical problem set, how it's developed, and why this piece of technology has a role to play moving forward.
Anybody else have a question?
Yes, a question here. Hi. What is your opinion on governance of decentralized infrastructure platforms and its influence from the VC point of view?
Yeah, I think obviously we should avoid like conflicts of interests. I guess you refer to what happened with the Uniswap proposal to deploy on the BNB chain with A16Z, but I don't think that's all about what VCs do. It's more about like, I think the decentralized governance system is currently completely like broken and just doesn't work. Just have to look at the participation rates, they're like very low and nobody cares. So yeah, I think we have to rebuild the whole thing from scratch. I don't have like the secret sauce in mind, but I just don't think that currently works. And honestly, that's very hard to implement. And I also think that early stage startups should not be focused on like decentralizing their like, governance, because that will like slower the processes, and that just like doesn't make any sense to me.
All right.
Hi, nice to meet you. I'm Dave. Sort of an expansion onto the first question. Pierre, you mentioned that one of the important things of an early stage is the team. So I'm currently a university student. Is there any advice you would give to us to sort of like position ourselves well into like being a good team member, maybe a leader into like the startup space, especially with blockchain? And then I guess sort of into that, like things that we should sort of research into or like learn more about to better prepare ourselves.
I'm maybe the only like serial entrepreneur up here, because I've started my own companies and worked at 1 million startups and have mentored interns and kids right out of college. And I know this was the case with me. Just like be willing to do whatever asked of you and to be flexible. Startups need people who are proactive and take the initiative. But it's again, I don't want to be like a whole generational thing, but I do find with younger people, they want to have like a relationship with the CEO from the beginning and be doing like really sort of high level stuff. But it's typically not what young companies need. They need someone who's going to be a team player, who's going to be a utility infielder, willing to do a lot of different things, and give yourself like a diverse set of skills. Because again, startups need people who can be slotted in and be able to pivot and really not sort of single-mindedly focused, but have like a variety of skills. I think that will make you super useful to a young company.
Yeah, maybe I can add to that because I studied a corporate career in investment banking in very, very gigantic investment banks, and then moved to startups, and now found my own, right? So I made the switch. If I were to talk to myself, 15 years ago, I would say, go for what you feel strongly about you want to try. Don't be scared about the fact that you need to prove yourself to whomever. In the end, you can try many different things, and sometimes the safe path is the best for some people, but for some others it is not. And the point on how you need to be for different, you can be different kind of people in different settings. I'm a vastly different person now than from I was a junior at Goldman Sachs before. A very different person and nothing to do anymore. So you can change, and also it's maturation. Maybe you can start in a certain way, in a certain field, and then you just see certain things that don't really quite work out the way you want, and then move to the other things. So yeah, be brave.
Yeah, be brave. All right, maybe time for one more question.
Maybe I can ask?
Yeah.
Yeah, thank you very much, Dmitry from Berlin. So when we are talking about predictions, and since we are talking about predictions, I have a question. It's really hard to get in focus some new mega trends. But what I was curious about, like recently I went to Google Play Market and just write Lightning, and I see at least 20 applications from Lightning Network and Bitcoin, so that allow to make nano payments, and which is really for me a vibrant topic, since it's also talks about financial inclusion and so on. And what do you think about it? What do you think about nano payments? What do you think about Lightning Network? And maybe what do you think about Nostr protocol? Is there some future? Or maybe not in 2023, maybe later? Thanks.
I don't know, you may have stumped us with that question. I think our time's up anyway, so, but thanks for sharing that. All right, thank you. A round of applause for everybody.
Thank you.